Let me assure you that the Federal Reserve will certainly do all that it can to help restore high rates of growth and employment in a context of price stability.
When current U.S. Federal Reserve Chairman Ben Bernanke hits the podium, the investment world eagerly anticipates his every word. Through its power to control interest rates and purchase assets, the Fed influences the flow of financial markets and the overall economy. Although subject to congressional oversight, the Federal Reserve operates independently within the government as a central bank of the United States. Before President Woodrow Wilson signed the Federal Reserve Act in 1913, the country lacked a central monetary authority. Rife with bank runs and panics, the U.S. needed a way to provide funding to depository institutions handing out loans to Americans. Enter the Fed. It acts as a commissioner of the economy. Despite its existence, the Fed failed to slow the speculative lending that led to the market crash of 1929 and the decade of economic decline that followed.
More than 25,000 American citizens have journeyed all the way from Pittsburgh to Washington to ask for the right to work.
Some economists, including Bernanke, blame the Fed's tight monetary policy and lack of action for worsening the economic collapse.
The Federal Reserve didn't understand what was going on. They were pursuing very orthodox policies constrained by the gold standard.
With 10 million still unemployed, America is having a hard fight back to prosperity.
Still, the Great Depression resulted in national banking acts that increased the central bank's role by placing open market operations under its control. Since then, the Fed has evolved, stepping in during times of fiscal uncertainty to help control inflation, avert recessions, and spark growth. Today, the Fed aims to create a stable and safe financial system. It manages the nation's monetary policy, or the supply of money, to help maintain employment and stabilize prices.
Great. Thank you very much.
It also protects consumers' deposits and credit rights by supervising and regulating the nation's banks. The Fed influences interest rates and the availability of money and credit through the federal funds rate, the interest rate at which banks lend their excess reserve balances to each other overnight. And it acts as a bank to bank. It clears checks, makes electronic payments, and dispenses coin and paper money. Bernanke leads the Fed's 7-member Board of Governors in Washington, D.C., all of whom are appointed by the President and approved by Congress. The 12 Federal Reserve banks gather information to help the Fed monitor economic developments throughout the country. But it's the Federal Open Market Committee that makes the monetary policy decisions and sets interest rates. The FOMC consists of 12 members, the 7 board members, the president of the Federal Reserve Bank of New York, and 4 reserve bank presidents who serve on a rotating basis. After the 2008 financial crisis hit, the Fed created a new rule book to help America's troubled banks get back in the game and rescue both Wall Street and Main Street. The plan cut interest rates to nearly zero and injected about $1 trillion into the economy through purchases of securities and the introduction of new programs to revive corporate and consumer lending. The Fed also launched a new round of quantitative easing, known as QE2, in November 2010, buying back $600 billion of government debt. In August, the Fed announced it would keep interest rates close to zero for at least 2 more years to support the flagging economy.
It is clear that the recovery from the crisis has been less robust than we had hoped.
Through the years, the Fed has been subject to media scrutiny over its monetary policy decisions. And with increased responsibility comes higher expectations, along with criticism from both sides of the aisle.
If you're concerned about socialism in this country, if you're concerned about communism, about government control, let's audit the Federal Reserve.
I think Ben Bernanke has overinflated the amount of currency that he's created. QE2 did not work. It did not get Americans back to work.
The Fed is trying to come up with a policy that does work in hopes of stimulating the U.S. economy. Its latest move, dubbed Operation Twist, plans to drive down long-term interest rates to give businesses and investors a reason to spend now. And as always, while the Fed mulls over its next monetary decision, you can be assured investors will be watching.